Hey everybody, welcome back to the channel. We are back on another episode of Daily Palantir, and today's episode is going to be dedicated to a brand new price target we got from none other than Morgan Stanley. This was a very interesting one today. They put out a report kind of similar to UBS in terms of they don't like the valuation, but they like the company. And we got to talk about the implications it has on the stock, why I think even though the price target is significantly lower than where we are today, it's still really bullish, and ultimately what this means for the future of Wall Street and how they cover Palantir. Let's get into it. Okay, so before we get into the actual upgrade, I want to take a little bit of a look at the stock. Now, today's a relatively green day in the market. We've got a lot of names that are pretty well in terms of their momentum. Bitcoin's obviously going up. Fubo had a big deal today. Nvidia cracked 150. Palantir down 5%. And the whole day, I've been trying to kind of figure out why is Palantir down 5%? Why is it really not participating in the some of the momentum that we're seeing today across the entire market? And I think there's two reasons. Number one is, well, first of all, Palantir is obviously extended, right, in terms of not only valuation, but also on Friday, it was up 7%. It was at basically $80 on Friday. So it kind of makes sense for Palantir to take a little bit of a breather. Number two, piggybacking off the Friday momentum, Palantir opened today at $79.98, and psychologically, I think it is very hard for the market to give Palantir $80 that easily. We did touch it just for a little bit in the morning, $80.06, and then we went all the way down to $74.61. Currently, right now, we're at $75.89. So I think that $80 fight is going to be a little tougher for Palantir to win, just given how much momentum it's had since last year. And then finally, I think the price target we got today actually can be interpreted as bearish. In my opinion, it's bullish. I'm going to walk through my reasoning for why. But the price target we got today from Morgan Stanley was $60, which is about 25% below where we were in the morning. And, you know, you could argue that means that Morgan Stanley is saying Palantir shares are 25% overvalued, which could lead to some people taking profits and basically saying, all right, we'll wait till it gets to $60. My thought process is a little bit different, and I want to get into kind of how I interpret this price target. All right, so let's get into the coverage first by Morgan Stanley, and then we'll talk about my response to it. So I want to read it through fully and try to just like get through the entire increase. And then we'll get into some things that investors don't really know about Morgan Stanley and how they've covered Palantir in the past. Okay, so here we go. Morgan Stanley assumes coverage on Palantir with an underweight rating, sets their price target at $60. Here's what the analyst had to say. The inflection in growth in our positively revised assessment of Palantir's positioning in the generative AI cycle is well reflected in shares, which were up 34% in 2024, driven almost entirely by multiple expansion, with Palantir's 56x EV to next 12 months sales multiple expanding by 292% in 2024. While we acknowledge this positive inflection and are looking for ways to become more constructive on shares, the lack of visibility on material estimate revisions leaves Palantir trading too far ahead of the company's intrinsic value to justify a rating upgrade. Specifically, our calendar year 2025 free cash flow estimate revisions are up 41% in 2024, but largely due to expense discipline rather than revenue upside, as calendar year 2025 revenue estimates are only 10% higher compared to the start of the year, and with management signaling an investment cycle ahead, further expansion looks muted. Second, the commercial business, where most of the AI narrative is expected to play out, has contributed less to calendar 2025 revenue estimates revisions than the government business. Third, on a DCF basis, the stock is already pricing in 30% 10-year CAGRs, in terms of compounded annual growth rates, and 41% free cash flow margins, which implies a calendar year 35 free cash flow of $20.9 billion. And finally, Palantir trades well ahead of high growth software peers at 111x EV to calendar 2026 free cash flow and 4.5x growth adjusted. Business momentum now appears to be stabilizing versus inflecting higher, with 13 of 23 KPIs down, taking quarter over quarter in Q3 after showing the best rate of change improvements in the prior quarter. Essentially, how do you summarize all of that? They're saying, look, we think it's expensive. We think the company is showing progress. We think their government business is doing a little bit better than commercial. We think, yes, there is some AI upside and that narrative is baked into the stock. However, given where the stock is trading at basically a $200 billion market cap with doing less than about $3 billion in revenue, it's hard for us to get to this $80 target that some other streets have, some other firms on the street have put out, and that, the stock is obviously trading at these levels. It's hard for us to justify our price target and our analysis, which would be congruent with where the stock currently is trading at right now. So, pretty basic analysis by Morgan Stanley. I mean, it's nothing that crazy. They're not like that upset. They're not really complaining. They're not like Rishi saying it should be worth $11. They're actually like, hey, we like it. It's just a bit expensive. We need to see some more earnings growth. We would like to see some more guidance from management on the commercial business. And then we think we can become much more constructive on it. My interpretation, the market interpreted this as a negative 5% down day because Morgan Stanley is saying 60, the stock's at 80, therefore you got to sell it because it's going to go to 60. That's like how I think the algorithms are interpreting it today. My interpretation as a Palantir investor that's been in this game for a long time is very different. Why is my interpretation different? Well, I remember the days. I remember them. Some of you guys probably remember them as well. When Morgan Stanley was covering Palantir before this analyst decided to assume coverage on Palantir. What do I mean by that? Well, this is not the actual client or the actual analyst that covered Palantir. This is a new guy. They had another guy. Apparently, they got rid of the old guy. Why did they get rid of the old guy? Well, I think this is the reason why. On February 6th, 2024, Morgan Stanley upgraded Palantir to a whopping $12. And they were still underweight on the shares after Q4 2023 earnings, which was one of the best earnings that we've had in a while. So Morgan Stanley said, all right, Palantir's only worth $12. Then on July 17, 2024, Morgan Stanley raised their price target from $12 to $20. So we got nicely from 12 to 20. This is why I am bullish today, because if we were at $12 in February, obviously there was a mismatch between how we understood the stock and how Morgan Stanley understood the stock. Then if we only got to $20 by July 2024, there was still a massive disconnect between how we understood the stock and how Morgan Stanley understood the stock. And by the way, fun fact, if you work at a research firm, you are not really, especially if you're an equity analyst, you're not allowed to tell your clients to be bullish or bearish on a name if your firm isn't congruent with your thoughts. So if you're working at Morgan Stanley for the past 2 years and you're super bullish Palantir, you legally cannot really advise your clients to be excited about Palantir because they're paying hundreds of thousands of dollars, if not millions of dollars, for your firm's research, and your firm's research analyst says the stock's only worth $20, which is why there's a lot of infighting internally sometimes at these firms, because like the equity analyst might think in some sort, or the sell side analyst might think in some sort of way, and then the person actually advising clients might think in a different way. So basically, bottom line is Morgan Stanley clients have missed out on hundreds of millions of dollars of gains because many of them were simply advised to not buy Palantir, which is why I think the previous guy who was covering Palantir is not covering them anymore. So why is this bullish to me? Palantir ended the year at $75 as the best performing stock in the S&P 500 last year. And again, Morgan Stanley clients didn't really get enough of that exposure because the firm kept saying to not buy Palantir. Now we have a new analyst with a new price target. Is $60 lower than we are trading today? Yes, and that's mainly because the new analyst has some concerns about an extended valuation, which is not that big of a deal to me because all these analysts are a bit concerned about where Palantir's trading given how extended that it is. Now, while $60 is lower than some street estimates of 75 to 80, the larger point in this new note that we got today is that we are beginning to normalize a range for Palantir that is in the 60s, which is what matters to me. Why? Because many of the bears feel that Palantir should come back to $35 due to valuation. The bulls have clearly acknowledged that valuation is aggressive, but that there is something special to Palantir, which in the words of UBS, which I did a video on last week that gave them an $80 price target, UBS believe Palantir deserves a quote-unquote material multiple ahead of other software fears because of Palantir's differentiated moat. So many SaaS names tend to trade in line with each other and have traded at the same multiple in 2024. Palantir was the one name that diverged from the rest, largely in my opinion, because institutions saw the value of the company and were willing to be a part of a story even after a massive run to 40. We really went from like 20 to 40 for the first half of the year. And then in the last 4 months of the year, we went from 40 to 80, adding about $100 billion in market cap, which to me was not retail. If someone thinks retail at $100 billion to dump into Palantir, be my guest. I don't think that's the case. Maybe we had $10 billion, maybe $20 billion if you really want to stretch it. I think the majority of that came from inflows from Wall Street firms after S&P and NASDAQ inclusion. So with Morgan Stanley, one of the largest Wall Street firms, getting on board and assuming $60 to me is a reasonable price target to have on Palantir, is very bullish, as even they are acknowledging that there will always be some premium to make shares expensive, but that Palantir is the only software AI story that everyone has been looking for, and it continues to get normalized as more firms outside of Wedbush and Bank of America begin assuming coverage. It's not just Mariana, it's not just Dan Ives, it's other firms like a UBS that says 80, or like a Morgan Stanley that's historically been bearish and says, hey, we think 60. The bears probably hate this so much because the more that the big guys get on Palantir's side, the harder it is for the stock to easily be looked at as some overvalued, hyped up retail name. I mean, You just can't ignore UBS and Morgan Stanley. You can ignore Bank of America and Dan Ives because you think they've been bullish forever, but you cannot continue to ignore other Wall Street firms that were bearish and that are turning bullish. Like logically, that doesn't make sense. So if these are elite Wall Street firms that have a massive influence, whether you like the influence or not, if they say buy or sell, their clients do what they say, that means it will have an impact on the stock. And it seems like many of these firms are fine with the premium valuation because of how they think Palantir will grow into it and how differentiated the moat is, which is why they continue to assume coverage and follow the story. That is why today's upgrade to me, or today's price target, it wasn't really an upgrade. It was kind of a underweight weighting. That to me was bullish. And the reason it was bullish is because I, for one, if Palantir fell back to 60, first of all, I would be buying at 60. I wrote that on Twitter over the weekend. 65 to 60 is when I start buying. 50, I start buying heavily. I think at that point, Palantir's growth is discounted significantly from where its intrinsic value could be in the future if they live up to that growth. And then you just got to believe, will they grow or not? And I think there's a world in which Palantir gets to 40% growth by the end of the year. I'm going to do another video on that later this week where we'll talk about it. But in general, I do think there is a world in which the analysts start to get on board with the fact that, look, this is a name that's going to be expensive for a variety of reasons. Karp's energy alone is what makes this name expensive. People want to buy into that story. They're excited to buy into it. This happens all the time in the stock market. You have a revolutionary founder, leader, CEO, visionary, and people want to be part of that story. That's not a bad reason to buy a stock. It's just a different reason outside of numerical quantitative analysis to buy a stock. And that's why the people that are on the quantitative side when it comes to Palantir, it's not that it's wrong to think about it from a numbers perspective. It's just that sometimes numbers aren't the full story. Take a look at this chart right here. This chart was put out by Altimeter. And this chart to me is really interesting because Altimeter has missed Palantir badly. I mean, they are the SaaS software firm on Wall Street. Their big bet was Snowflake. Snowflake has not really done as well as Palantir. As you can see, all the names, when you look at next 12 months revenue growth versus next 12 months revenue multiple, Snowflake, Palo Alto Network, CrowdStrike, DocuSign, Adobe, Zoom, etc. They're all in one section. And then Palantir is in an island of its own. Now, either that screams egregious overvaluation or that screams Palantir is fundamentally differentiated from a lot of these names. And because it's differentiated from a lot of these names, the stock is always going to be expensive. Does it deserve to be this expensive? That's up to the market, which in my opinion, if it goes back to 60, I kind of don't care because I would be fine buying it at 60. And if Palantir can even hold a $120 billion market cap, which is what it would be at 60 versus a $200 billion market cap, I think that would give shares time to consolidate. That would give the street time to accumulate. That would give longs a chance to enter again because it went from 60 to 80 very quickly. And it would not be the 50% bubble bursting collapse that the bears are asking about. Now, will they laugh if we go from 80 to 60? Sure. But that's one of those days where you're like, okay, you can laugh right now. First of all, you missed the entire run. Second of all, I mean, if you're laughing at this because you think a 25% haircut is something that's bad, whereas in the stock market, that happens all the time. The biggest companies in the world go through these haircuts. Most of them go through 70 to 80% haircuts. So it wouldn't surprise me if we see that type of a haircut. I just think given the amount of people waiting to buy the dip, given the excitement we see on the street from these new analyst reports like UBS and Morgan Stanley, which is definitive, objective analysis from different firms, not named, not Wedbush or Bank of America, that are getting more excited about Palantir, that getting to $40, which would be a 50% decline from here, is not going to be easy. Palantir would have to really mess up earnings, which maybe they do, but I don't think they're going to. And if they don't really mess up earnings, I don't know how easy it is for us to get a 50% discount. And if we do go to 40, I would be, I wouldn't be upset to be buying shares at that level. But that's kind of my point here, is that if all the bears are obsessed about valuation and everyone wants to buy the dip at 40, everyone's thinking in one direction, which is that this has to come down. Whereas you're seeing some of the analysts come out and say, yeah, it probably needs to chill out a little bit because it's trading at extended multiples. But these are not price targets of 40. These are not price targets of 30. These are new price targets of, hey, we were at 20. Now we're at 60. Hey, we didn't have any coverage. UBS, now we're at 80. And because of this, I think that momentum can continue to carry on. Now, what does this mean for the stock price? Obviously, right now it's down 5%. Street's kind of like, all right, Morgan Stanley says 60, stock's at 80, maybe we sell it off. In general, Palantir showed incredible strength over the past year. And in a real market correction, 10 to 15% down, we're going to see if Palantir can continue to maintain that momentum, which I think if we can hold 60, if the market falls 10%, that is incredible momentum. Bulls have to remember, including myself, we are trading at very high multiples, which means the best thing we can do is consolidate and justify those multiples and then expand the multiples, which might take some time. It might not be as quick as it was in 2024 going from 16 to 80. But that's okay, because most bulls bought a long time ago, and we're really kind of holding on to our positions for the long term. And so from that perspective, unless Palantir massively messes up earnings, which I don't see happening, then I think there is a world in which the analysts start to do the work that retail did at $6, which is really study the company at 60, 80, $70, and then initiate coverage, which allows Wall Street to say, you know what, Palantir is an expensive name, but we're going to normalize it at these levels. And we've seen this happen all the time. We saw this happen with Tesla. We saw this happen with Nvidia. We saw this happen with Amazon. And I'm talking about Nvidia before the massive growth run up. Well, even in the massive growth run up, it's almost a $4 trillion company. Some people say Nvidia shouldn't be, able to be valued there, but it's not just about the quantitative growth rates, which eventually are going to slow down. It's about the story of AI, CapEx, et cetera, that allows the street to normalize a certain range for a stock. I think that can happen based on what Morgan Stanley said today with Palantir. And I think, to me, that's very, very bullish. Now, could the stock fall from 75 back to 60? Sure. But could it also just show really good strength at 70 and that's the dip and then it comes back to 80? That could also happen. I think 2025 is going to be a year that's unknown for how the stock reacts to all the fluctuations with all the macro. We got Trump getting sworn in. We got a lot of stuff going on. But the fact that more Wall Street firms are at least beginning to say we can see 60 to 80, we think it's possible, to me is very bullish for Palantir in the long term. All right, that's it for me. Thank you, everybody, for listening and watching. dailypalantir.substack.com. If you have not subscribed to the free email newsletter that's out every single day, I'm going to be putting out our first newsletter of 2025 here today. So probably around 8 to 10 p.m. Eastern, it's delivered to everyone's inboxes if you want to check that out. Thank you all for listening and watching. Let me know what you thought about Morgan Stanley and their new Palantir price target. And I'll see you guys in the next one.